morning, guys. Listen to these tunes. Banging. Good morning. Today is the 10th of April. I was about to say 1925. What the hell? 2025. And this is basically a daily levels, a daily preview video. This is the sort of video that Prof MG does in the campus. So I just not necessarily trying to copy him, but doing these videos helps me, and I hope it helps you as well. We were discussing last week the Bitcoin crash, and I think we were just here. This is where we were. And I was saying, guys, if you are panicking, if you think the bull market is over, don't sell here because there's always bounces. And then we got a bounce. A lot of people got bullish. A lot of people said, yeah, this is the bottom. And then we came in for another retest. And I just want to point out that if you look further back, these lows where everybody says it's the bottom, they often get retested. And that's part of the psychological game, because people they won't buy like exactly here, or if you have an order, you will. They'll buy like here somewhere. And then they'll watch this go up. And it actually goes up into resistance. Goes up into resistance. And people are like, okay, this is the time. We're gonna break out now. And then price starts to go down. And they see all their gains erased because they don't take profit, because it's going to, so much higher, whatever. And then they capitulate at break even, and then the market goes again. Yeah, I mean, I think that happened to me. It probably must have happened to you as well. I think it happens to everybody. So this rally here was all about Trump saying that there's a 90-day pause on the tariffs, and obviously the markets rallied because of that. But today we have the CPI inflation data, so that's a big one, guys. The way I see it short term, if we draw a range, a local range here, because of the data, I am inclined to think that potentially this is a deviation, and we will get back inside and at least go to the mid, and I'll show you why. Because the midpoint is confluent with the point of control. So basically this move here was very inefficient. Very inefficient. So we will see today what happens, but if the tide does shift, this pump from 76 to 83.5 show that the market is hungry. That's how I see it, at least. But for me to start taking longs, I did take a long yesterday actually on Athena, which I closed now. But for me to be confident in longs, this red line, which represents a bull bear indicator that I've created myself, but is a copy of, well, there's many of them, is the 12 and 21 EMAs on the daily time frame. As long as this is red, I am bearish. If this turns green, then I'll think about longing. And actually I'll put up a video today about FOMO and why you should just sit and watch this type of pumps, not try to chase them. But that's later on. Ethereum pumped as well, not as much. We did have a nice div here, a nice bullish divergence, and Ethereum was in the extreme oversold territory as well, but that doesn't mean anything, guys. We can stay there for a while. The S&P as well pumped, and at the moment it's rejecting from resistance. If you look on the daily, these two candles here represent the 2 days of up price action that went up into the bands before we nuked. This was a significant drop. This was a 16% drop in 1, 2, 3, 4 days. So now price has retested it, and so far it is rejecting. The same with this. I'm not trying to catch the bottom of the S&P. And if you look at this chart, it is a bearish chart, unfortunately. There's nothing bullish about this at the moment. Okay. If we draw the volume profile of this move up, I think it's gonna take some time to fill up the candles. Let me delete this. There's two scenarios here I'm looking at. One, that this would have been a nice retest of the January 22 high. Retests like this often are to be bought. Yeah, this was a front run. Okay, this doesn't load. I don't know why. It's probably too much data. Trading view's been so bugged lately. But what I'm trying to say, okay, if this was the bottom, I will be expecting some sort of higher time frame retest. Because the nuke this time was comparable to, I think, the COVID crash, as I said in the previous video. So it's just catching a knife, basically. I would be more inclined to short here, but ideally I would have had an order there, invalidation above that wick, and then let's say fill this inefficiency, which I think probably left a gap as well. Let's see. S&P 500. Oh no, I can't see the gap. I'm guessing no. But anyway, guys, you get my point. This is an efficient move up, and they often get filled. With the rest of the market, basically the same. So my only thoughts for now are wait until the CPI news comes out. If we manage to get unstuck from this monthly open and this range high, if we manage to break out at any point, up or down, or get back in the range, like I said, and go to the mid, which would be 77, 78 area, then there's a lot of time, plenty time to long, guys. You don't need to catch the bottom. That's all for today, guys. I'm gonna put up a video about FOMO and some psychological stuff, and I'll see you in the next one.